No Money But Dreams podcast is for those millennial dreamers
who try to be in the top 1%.
It doesn't matter what we've achieved.
We wake up every morning with the mindset that we're still broke.
We welcome you on our journey in search of that home run.
Which can change everything.
Everything?
Everything.
Welcome to another episode of the No Money But Dreams podcast, where we speak to some of the biggest business leaders in the region and especially entrepreneurs. Today, we are very, very proud to have Mr. Avinash Babur, correct?
Yep.
With us, who, as you know, is the founder and CEO of insurancemarket.ae. Thank you so much for coming on the podcast. I actually first got introduced to you on another podcast in your office, which was a great experience. And I felt like there was a lot of learnings that you have as an entrepreneur in this particular market. And I saw some similarities between me and you, as both of us kind of came out of university in the UK and went directly into either a family business or a business of our own. So we've never really worked for anybody else. And it's incredible to see how you've grown your business. So I think there's a lot of value that we can give viewers and anybody else.
Thank you, Alex. Yeah, happy to be here. I too enjoyed that podcast we did and learned a good number of things. So yeah, looking forward to this conversation. From what I've heard so far, there's some good stuff coming.
Hopefully, man. Anyways, the first thing is kind of, who are you and what's your mission?
Okay, who am I? I'm a father of two, loving husband. And my mission is to wake up in the morning and create value every day, add value every day, create a system where, the sum is greater than the parts.
Nice. So at the moment, you've built a business now, which as of around 3 months ago has 200,000 policy holders. I understand.
Yes, that's insurancemarket.ae.
Yeah. And I wanted to understand how that trajectory looked like. I understand that in general, you've been able to grow the business by around 30% year on year. And in total, you've kind of grown the business from whatever you had in the beginning by 25x. Was
Correct.
It always like that, or how did you get there?
Yeah, the growth has been pretty consistent in between 25 and 35% year on year. So the average CAGR, if you like, compounded average growth rate is around 30%, which leads to a 25x of that traditional business that I stepped into, which was my dad's insurance brokerage firm called Afia Insurance. I say was, still is. And incubated within that, we started insurancemarket.ae, eventually rebranded the whole company to insurancemarket.ae, and consistently, profitably kept growing it, reinvesting earnings as well as retaining earnings and distributing earnings, because I think that's important for the health of a business. Kept doing that now for almost 14 years. And it's been a great journey.
What opportunity do you think that you saw that others didn't, that's kind of allowed you to place yourself where you are? Because I understand there were a lot of competitors, and a lot of competitors flush with cash, right? A lot of VC funding which has come in. You guys have not taken external funding. How has that kind of played in?
Yeah, I don't think there was one big genius idea, nor were we out to disrupt anything. There are certain sectors which do not get disrupted very easily. Think about banking, think about insurance in our case. It's actually easier to transform them from within, evolution, if you like, as opposed to revolution. And so, there were a lot of legacy issues within this industry, which we identified. There are still a lot of legacy issues there, but it's not an overnight kind of transaction to change the game forever, like Uber may have done for transport, for example.
But you saw, obviously, your dad's business and saw an opportunity to digitalize it. And how did that kind of play through your mind? Because a lot of people came back from university, they went into their parents' business with fresh ideas from university and whatnot, but being able to identify that this could be brought into a digital way and actually scaled way faster, that was a pretty good insight.
Yeah, at the time it didn't feel like anything special because it was 2010 already. Like, we'd had the internet for 15 years. We were all very digital savvy, being millennials at the time. The natural thing was to think of, how to build a business using the tools that are at our disposal. So we didn't think about faxing and scanning and things like that first. So naturally, when we wanted to market the business, I needed a good website that I can tell everyone, because that's the easiest way to get intent from a customer. Like, I could see no other way. It was just it wasn't a genius idea.
The first
or an
website, what was the
intuition.
first website called again?
Well, actually, the first website was called quotebeater.ae.
Yes.
We'll get you a cheaper quote.
Yeah.
That lasted all but 2 months, and we rebranded to insurancemarket.ae quickly from the learnings. Thankfully, we weren't pivoting like many entrepreneurs do that often. That was the one pivot we did, and then we stuck to our guns.
And talk to me about Alfred.
Yeah, Alfred was, it was something that came naturally to me, maybe because of some of the time I spent in the UK looking at how insurance distribution brands were developed in a more, let's say, mature market. And, you always, for a consumer brand, need to be accessible and friendly, especially for a brand or especially for a line of business which is kind of boring, kind of dry, kind of complicated seeming, like insurance. So again, it came very naturally to me that we needed to have a mascot. And at the time, every insurer we worked with, or the insurers that we worked with, wanted to attract Western expat clients because they have the best loss ratios. Things have changed big time now. But frankly, that was the thing. So it was about, well, how do I find Western expat clients? Well, let's create a Western expat brand mascot and run it on Western expat radio stations. And that's all there is to it, frankly.
And that was the first kind of marketing strategy that you went with when it came to insurancemarket.ae? It was running on the radios?
Radios, correct.
With a jingle.
We ran radio ads. We ran ads on Dubizzle. Actually, the very first marketing campaign we did was on Dubizzle. At the time, Dubizzle was really special. I mean, it's special now too. You can, I still go to Dubizzle.
You had to throw that in. Huh? It was really special.
But at that time, it was
the
a
one
phenomenal platform. I mean, I don't know if you remember, but you could spend hours on Dubizzle looking at so many different things. It was the Reddit, it was the Beirut, it was the
everything in one.
For Dubai, right? To do business in Dubai. So I was a big fan of Dubizzle. We did campaigns on Dubizzle. But I think, growing up in Dubai, radio was a part of
going to school, sitting with your parents. Exactly. I remember listening to the jingle and listening to all of that.
Exactly. So I jumped on the opportunity as soon as I could. It was much more expensive than doing other things.
Yeah.
Right?
How did you justify that?
I couldn't. I had to. The story is that I joined the company thinking that I can, use the cash flows of the company to build the
hook
business,
it up.
And Dad wasn't having it. I wouldn't be able to spend a single dirham of the company. I had to earn every single dirham that I had to invest in insurancemarket.ae. And so that's what we did. So I personally sold as many policies as I could, which was a great learning experience. I think having that experience is what enabled me to truly understand the consumer and to build something for them. So just went on that journey, sold as many policies as I physically could, went to Facebook to generate leads, went on Dubizzle, sent text messages to everybody posting cars and letting them know that, hey, if you're going to buy a new car, you can come to me and we'll help you out. We started this thing called insurancemarket.ae and literally kept doing that until there was enough revenue to be able to run a radio ad campaign, and started with one radio station running 1 or 2 weeks every month and for a very limited number of spots, and then built from there.
And then how would you measure your ROI on that though?
It's impossible to measure ROI. Just because the value can't be easily measured doesn't mean it's not there. So it's a bit contrarian, because at the time, everything, intuitively, it's like, hey, run Facebook ads, run Google ads. You'll get your leads in, you'll get your sales in. Even at that time, the cost of customer acquisition was so high.
I mean, your margins are razor tight, no?
And margins are thin, and the cost of customer acquisition was high. So it was like, well, in hindsight, it wasn't that deep of a thought, but in hindsight, why will someone click on your ad, and why will someone come to you, and then why will someone buy from you? It's because they trust you as a brand. So what we were doing was brand building, which was a slow and painful journey, but that's what enabled us to get to where we are today. And it's very difficult for anyone else to replicate unless you have 13, 14 years of consistent brand building behind you, because we're not intending to stop.
For sure. I think a lot of entrepreneurs want that like quick win, and they don't realize that building the brand is actually the defensible moat. And that just takes time. You need to just show up day in and day out, be building and letting people know that you're there. And then you slowly start to take market share, but then it becomes very difficult for people to take it away from you.
Yeah. And there's a lot to talk about product versus marketing. Frankly, we didn't have any product for the longest time.
You just
had
focused
marketing.
everything on
Focused
marketing.
and then amazing customer service. Let's say customer services product. It's not actually the digital product, right? It was just a form for the longest time. And we used to face a lot of criticism from, industry thought leaders or just generally people in the tech sector that this is not a serious company because there's just a lead generation form. I think for like 8 of the first 14 years we were just a lead gen form, but we would call the customers back immediately and make sure they got what they needed. And as far as customers were concerned, Google reviews were concerned, customers were very happy. They loved it. The acquisition rates were good. The retention rates were good. So, my line of thinking was that the market votes with its money, consumers vote with their money. And so there were a lot of startups, to your earlier point, with VC funding, thinking, oh, this is a joke. We can like digitally disrupt this business, right? Let's raise $20 million. Let's raise $30 million. I think in aggregate, more than $100 million have been raised to try and disrupt this business. And none of them are in business anymore, So the thing is, you've got to listen to the consumer. That's the ultimate truth. It's not about building tech for the sake of tech.
You touched on Google reviews. I think you have over 20,000. Is that correct?
Yeah, 23,000 plus as of
23,000. And how do you encourage people to leave a Google review? Is there some mechanism that you figured out?
No, other than making sure they have an amazing customer experience and asking them once or twice. We don't push, we don't incentivize staff to do it. We don't want to do any of that. I think that might lead to more 1-star reviews.
Yeah.
So, there's no way to inauthentically get Google reviews. You've got to be legit. You've got to be able to deliver. And not only in terms of the buying experience, but also in terms of the claiming experience. So the April floods were an excellent example.
Oh yeah, that must have been.
We looked at it as one of the greatest marketing opportunities. Of course, it was a difficult time. Everyone had to come together. But selfishly, it was like, let's make sure customers are extremely well taken care of, get their claims paid out, and even have a friendly voice to talk to and vent.
Yeah.
And share their challenges and problems. Sometimes we have to play the role of a counselor even when it comes to claims because it's an emotionally difficult time.
Very emotionally charged.
Average call time was half an hour. Now, there's not much to talk about when it comes to a claim.
For sure.
I need these documents. I need to understand what happens. I'm going to make your case. Right? For a claims manager, there's literally that. But customers want to talk. They want to explain in depth and they want to, vent and they're frustrated about something, and we listen and we try to help as much as we can, and that's what. So we got a record number of Google reviews since the April floods, and when someone gives you a review for a claims experience, that's worth to me 10 times more than a buying experience because at that point I'm not earning any money.
Yeah.
I earn money when I sell you a policy, not when you make a claim. Actually, that could work to my disadvantage, right? Because ultimately the portfolio for an insurance company might lose money. But that's the moment of truth. That's when you deliver. And, I'm so happy that our claims team was actually able to deliver at the time.
And how do you foster that kind of commitment to the client over like how many claims people work for you?
Yeah. So we actually doubled the size of our claims team overnight. We moved people from the sales advisory side of the business into claims. And when it comes to claim service, we incentivize very well. We incentivize properly. We take very good care of our team. And, obviously we hire really well as well. So the objective there is not to be customer support, or a paper pusher, but it's truly to be able to add value.
Yeah.
And, somehow, being a great place to work, certified type of platform, works.
Attracts the right people.
Take good care of your employees and they'll take good care of your customers.
And you incentivize them in a sense of a monetary incentive or how do you, like, because incentives are so important. They rule the world and like any entrepreneur is fully aware of that. But I feel some people might not understand that incentives are not only monetary.
Yeah, not just monetary, but monetary is like the hygiene factor, right? Like
Yes. That's like the minimum basis.
you've got to do that. Otherwise, all of the other stuff won't matter. But once you've done that, it's about what can you do to make it a safe place to work, make it a fulfilling place to work, make it an enjoyable place to work, make it a place where you have recognition and appreciation, and everything that a human needs, right? It's the traditional Maslow's hierarchy of needs, and it's about the organization making the best possible efforts to be able to give more and more value to people that contribute.
And this way of thinking everything, did you just develop this on your own, or are you reading a lot of different like management techniques and things like that? Like, how do you acquire knowledge?
I was actually a big fan of the A level in business studies. I think I learned more in that, and I learned everything I needed.
Don't tell your dad that.
Yeah, everything.
Why did I pay for university?
More than university and all of that.
Yeah.
Just the basic stuff like this Maslow's hierarchy of needs. It's brilliant. You don't really need to know much more than that.
Yeah, literally.
But I did read this book at university called Good to Great by Jim Collins. Absolutely fantastic. I was asked to criticize the book because of its academic rigor, because it doesn't have very much of it. But I couldn't help but just love it and write praise about it. So I didn't do very well in that paper, but I really believed in it. And so, interestingly, the platform I got into was a very good insurance brokerage firm, a good quality traditional insurance brokerage firm that my dad had built. And then it was just a case of literally testing, can I make this good platform into a great platform? And it's incredible. Like all of these things that they talk about and all of the things that you expect to happen, that those stock prices, the flatlining for a bit, and then suddenly it takes off like a rocket ship, and then you do that all over again. I saw that happen in front of my eyes. So, whether it has academic rigor or not, that book is brilliant.
But when you flatlined, how did you stay in the game? How did you stay motivated? You obviously have a bunch of people saying, look, this young guy coming in trying to disrupt everything, it's never going to work. It's just a customer acquisition channel online, etc. You obviously have to also believe in yourself. It's easier said than done in the darker times when you are in your own head and you're really questioning, what the hell am I doing here?
Yeah, I don't know. It was just, I was like, I was actually more egoistic as a 21-year-old than today. I feel like
me too.
I've like humbled more now. Yeah. So there was just this arrogance.
Yeah.
Like, I don't even know where it came from. It was so damn arrogant about everything. So it was like not even like, I wasn't bothered about anything. It was just like, of course it's going to work. Like, I don't know where it came from. But yeah, like in today's terms, like, you see all of these, the valley of death, and you got to sustain that. And it's all true.
Yeah.
But it wasn't conscious. It was just something that came naturally to me. It was like, of course I'm going to win.
It's almost like a gift when you're younger that you have that mentality. Like if I took you at your age and put you in it, you'd be like, oh, maybe this is not going to work. Maybe that's not going to work. But when you're in your like 20s, you're just like, no, I'll figure it out. There's no way it can't work. Why would it not work?
Yeah. Like the self-doubt thing, I don't think it actually existed.
Literally.
In my 20s. Yeah.
I'm also surprised I didn't kill myself in my 20s as well. Some of the things that you do and you're just like, oh, that looks totally fine,
Absolutely.
Hang out a window of a car in Mykonos, cool.
No, the kind of risks you take. Like when we took our first billboard on Sheikh Zayed Road, it was a lot of money. Like it was.
How much was that?
It was $500,000 dirhams.
Oh my God.
For one billboard.
What a Range Rover used to cost.
Yes, exactly. Now 2x that maybe. But $500,000 dirhams for I think a 3-month campaign, which I mean we did negotiate, but it's still not the worst price for a Sheikh Zayed Road billboard in those days. But still, like to commit, like never having done outdoor advertising before, to say we can take a billboard on Sheikh Zayed Road and make it work for us. And then you've done that, and then the billboard's up, and then you're like.
Where's the ROI?
Where's the phone calls? Where's the sales? Where's the leads? Where's the phone calls? Right? But that's it. Yeah.
Yeah. But that's all part of circling back to building a brand. Like that 500,000 dirhams, you didn't need an ROI necessarily because you can't calculate what intellectual property and like what in the mind of a consumer for them seeing that billboard, then listening to a jingle, then something else. And then all these things come together and then you have that explosion.
So you have that belief and then you have the ignorance. And these both go hand in hand. Ignorance is bliss. So it's actually helpful that you can't, I was on a panel recently where they're talking about how much more measurable everything is becoming when it comes to offline media.
Yeah.
Right? When it comes to outdoor advertising. Oh, we'll put sensors on billboards so you'll know how many cars and you'll know the demographics and all of that. And I was like kind of sitting down and being the skeptic there. I was like, maybe I'm old fashioned, but the whole point is that it can't be measured. And that's why I love doing it.
It's intangible.
Yeah. And if I had to measure the hell out of everything, I would run Facebook ads. Like that's always been there.
Yeah. If you had a chance to do it all over again, what would you do differently?
I would start building tech much sooner. So all said and done about us being, a very offline type of player for a long time. And I attempted building tech and I struggled. And I think the big mistake there was not hiring a very, very good CTO early enough. We actually got our proper CTO in 2020.
Okay.
Literally 20 or maybe 2019.
Before or after before COVID?
Before, just about during that period, right? I think maybe actually probably 2019. So that's like 5 years ago. So from 2010 to 2019, we didn't have a CTO. We didn't have any proprietary tech, You're
using white label?
Arrogance, right? It was like, no, there's so much SaaS out there. Why should I reinvent the wheel? We'll just subscribe to various SaaS products, stitch them together, and it'll work.
Yeah.
Blitz scaling. Let's just do more marketing. And it worked until a point. But then, we were sat there at one point with 650 people and a lot of work being admin and monotonous and disorganized. So, I'm glad at least, better late than never. That was transformational, getting a good CTO. But so was so many other things, like getting a good CFO and getting a good CMO and all of that. Yeah, it's all important.
The people you hire is extremely important.
You need good leadership. When it comes to that kind of stuff, you need people who will tell you what to do as opposed to you telling people what to do. And you can't afford that in the early days.
No.
And then you get into the habit of being the taskmaster, the guy who knows everything and gives everyone instructions. That'll lead you to plateau at a point. And then if you want to take it to the next level, you need subject matter experts.
Because today you have around 420 staff, right?
Yes.
So you would have cut 200 from that time you were telling me about the 600.
Yeah, and we're probably like 3x the size.
Wow. It's incredible to see how much monotonous admin tasks you have.
It also goes to show, like, once you have some kind of brand or product market fit or whatever it is, how efficient and effective good tech can make you.
Yeah.
And this is tech where it's been built without any VC or anything like that. So I'm building it in my way. There's nothing to show to anybody. There's nothing to prove to any investor or anything like that. It's about what will truly add value to the ecosystem, whether it's to internal customers, external customers, or partners.
Definitely. And obviously you've bootstrapped this technically, you've used money and reinvested, but there must have been people who have come to you and offered to invest or offered to give you money or maybe even give you an exit. How have you dealt with that? And kind of what is your exit plan?
Yeah, actually, the thing is that I saw this on an Instagram reel somewhere, but like the best investment opportunities come to you. You don't go to them. When you go to an investor, you're selling, right? But if an investor comes to you, they're selling to you.
Yeah.
So I've been in that position, thankfully, a good number of times. And actually some deals have clicked. These have not been investments into the company, but they have been secondary transactions. Now, when you're a bootstrap company, having that secondary transaction actually gives you that sense of comfort personally that, you have a piggy bank, and it actually enables you to scale faster.
Secondary transaction.
A secondary transaction meaning you sell the shares and they pay you the money. They're not injecting money into the company because the company is profitable, doesn't need money. It also enables you to actually be the treasury for your company as you're a bootstrap company, right? So we're very asset light. We don't need to have money tied up in the business. So when you have your own treasury, that actually gives you a little bit of confidence that, should I want to grow this faster and should I need to run cash negative for a bit, I can model that out and I can afford to pay for that. And we actually did that.
Okay.
And it helped during some critical times. So not that I enjoyed it particularly. I wouldn't recommend anyone to do it if you don't needs to do it. We did it just for, again, I guess, just to take some risk and have some fun. And it was it was a bit. I wouldn't call it fun now.
When was that? Which
that was
years?
like around the COVID period as well.
Okay.
Yeah.
You just
So
said
it was-
YOLO. Let's do this.
No, it was
Cash
like-
negative, baby.
like, guys, it's COVID, right? Everyone's gonna go online and buy,
Yeah.
right? All the traditional guys are gonna get disrupted. Look at Zoom,
Yeah.
right? So
For
that
sure.
was the line of thinking. So it was like, okay, this is the land grab opportunity, which it was indeed. Like
Definitely.
we grew massively during that period. But we ran cash negative for a bit for that.
On a month or longer than months? Like
no,
quarters?
It was quarters. Yeah.
Wow. Okay.
Yeah, we ran cash negative, but it and at that time, I think that's when I was in my early 30s, I just turned 30. So I think,
Still had that hubris from the 20s.
that was like fading out, and self-doubt literally started to emerge like out of nowhere. And it was at a time when actually the biggest risks were being taken. So that was interesting.
Yeah.
But yeah, once we got through that, everything actually turned out as intended. Like it was a land grab. It did cement us, and it did separate us completely from everybody else in the market, to be frank.
Man, there's that feeling where you have this plan and you execute it and then it works, and that feeling is like addictive.
It's addictive.
It's literally like a
but
drug.
it just takes so damn long.
I know.
That by the time it works, you've like almost worn yourself out. That's what I feel.
Yeah.
Like I wish it was like finite, but actually, it always takes longer than one would think.
Yeah, longer and usually costs twice as much as
Yeah.
well.
And which is why, to put a positive spin on this is what I tell everyone, especially our team, is like, guys, we're just getting started. And I literally feel like that. Like it's been 14
I can
years.
see your eyes light up when you
But
say that
yeah,
as well.
It's been 14 years, but I'm like, look at the road. Like we've probably gone 5% of the distance that we believe we can go. Like there's so much to do. There's such a brilliant roadmap to look forward to. And I think that inspires people.
For sure.
Like the glass half empty of that is like, wow, this is taking so damn long and it's so damn slow. But when you look at yourself compared to everyone else, it's like, well, I'd rather work for this company that has such prospects and such
Of
exciting
course.
things,
Yeah.
as opposed to another one which is just doing the same thing day in, day out, and generating some cash.
I think that is like 20-30% of leadership is being able to like tell people like tomorrow's going to be a much better day, and like this is where we're going, and come with me. There's like that like.
And if you do it in a sector like insurance, like talent acquisition is like everybody in our market wants to come and work for us, which is a great privilege for us. Actually.
That's amazing.
Yeah.
And how do you manage all these people trying to work with you? Like, what's your system that you've created?
No, we have a core management team, and I try to engage only with my core management team.
Okay.
Not that I don't enjoy communicating with everyone, but after a certain point of time, you need headspace.
Yeah.
Especially if you follow this strategist integrator model. So I feel like I'm at my best when I'm just strategizing, coming up with ideas, or setting direction. I'm not very good in, putting my head down and working. So if you're following that kind of model, and then you need some really good integrators under you, and then you have integrators under them. And if you can, it's an iterative process. It doesn't always work, and there's always bottlenecks you identify. But if you follow this kind of model, then you'll always be able to see the forest from the trees. And actually, as you grow bigger, it actually gets easier to build a company.
Yeah.
Because you have more resources.
Exactly.
You can hire more subject matter experts. And you can deploy more in technology and efficiencies and all of that. So actually, as you today, for me, my job is much easier than it was 10 years ago.
Oh, for sure. Yeah. And how do you, what comes to your table then? From 420 people, 200,000 policy holders, selling policies, dealing with claims, etc. What actually comes on your table on a daily basis?
Yeah. So firstly, whenever something comes to my table, my first question is why is stuff coming to me? I should be putting stuff on other people's tables. So that's the first line of thinking. Why is this my problem? That means nobody else in my organization was able to solve this problem, and now it comes to me.
I love that.
So I try to avoid things coming to me. I should be putting things on other people's tables.
Dishing out problems.
But no, look, there's you know, every now and again there's some kind of crisis or mini crisis that needs to be addressed. I'm obviously responsible for making sure that the organization, ultimately the buck stops with me, especially when it comes to regulatory aspects, compliance,
Of course.
corporate development, right? So where we're investing in terms of new businesses, horizontally, vertically, we've been paying particularly recently more attention to building out our corporate strategy as a group. So that kind of stuff, ultimately, you know, a lot of decisions lie with me. Or like, you know, we discussed, if there's somebody willing to come forward and, you know, strategically be a partner, want to invest in us, inevitably they'll want to hear from me for a bit. Although I'm trying to, you know, put that onto a more kind of investor relations process, because there's lots of conversations, and, you know,
Of course.
if something is really serious, then
Let
I
it come
I
onto me
might
too.
get involved. But you know, these types of things eventually I will have to, you know, be involved in.
Okay, fine. So now you've gotten this far. How many years? It's been 14 years?
14, almost 14.
Almost
Yeah.
14 years. What's your exit plan?
No exit plan. It's just good fun. Like I love what I do. I want to continue doing it. The roadmap is so damn exciting. There's so many things coming up. So there's no like motivation to exit. So in my TED talk, I obviously spoke about me having a very clear plan in terms of 7 years
Yeah.
of building a money generating machine.
Then film
and
director.
Then doing what I love to do,
Yeah.
which was be a film director. But then in that 7-year period, I realized that this is giving me all of the creative fulfillment I would have wanted, and I absolutely love it. And there's no motivation left to be a film director, and that got worse once AI came out.
It's gone
Once
now.
you know, all of the LLMs and everything started to do what they're doing now. So no intention to exit. Just want to continue building the brand and, you know, building the business in a way that's sustainable, having a bit more of balance, like not doing crazy risky things ever again. You know, be building a more sustainable platform. But then again, you know, in proportion, even a small risk today has meaningful impact as opposed to what would have been a massive risk before. So, you know, it's a good place to be in. So I'm very, very happy.
And would you consider an IPO maybe?
Yeah. That for me wouldn't be, you know, an exit. That would be another step or another feather in our cap. So we don't have to do it, but, you know, if everything is right, we would. You know, for me, the biggest consideration is that will the environment be conducive to a growth company IPOing, right? So we've seen some brilliant IPOs recently. These have all of these have been like low growth, high profit. You know,
What's your
big
EBITDA
companies.
margin?
So
Percentage wise,
percentage,
if you're allowed to say it.
I can give you a rough sense, right? So like if you know, for every dirham of premium that we do, we earn a low double-digit margin.
Okay.
And then from
Gross profit.
Yeah, that would be gross profit. And then from that, we net about a low double-digit margin.
Okay.
And that's after OPEXing out everything that would typically be considered CapEx. So, you know, whether I'm building tech or whatever I'm doing, I'm in these numbers, I'm not capitalizing anything. I'm just considering it all as an outflow and an expense. Despite that, it's a low double-digit net margin as well.
That's great, man.
Yeah.
So if I gave you $500 million from your IPO today, what would you do? Since you don't want to exit, you want to keep building, you're not really taking much money from investors, and you're on a high growth trajectory, what would you do with $500 million?
Okay, so this is a bit of a curveball, but I actually have a whole plan in mind for if and when something like that happens. So the thing is that the current business is sustainable and is adequately cash flowing to be able to support all of its aspirations. And for me, it's important that it be that way because you know, you don't want to artificially inflate and go on a path which is unsustainable. It could be a short-term thing like we did, you know, during
Negative cash flow
COVID and
days.
run negative cash flow for a bit. But you don't want to go down this route where there's just so much capital that now you lost sight of everything and you're just throwing money at everything. That could actually be very dangerous for a business and end to its demise as well.
Yeah.
So I would want to continue building that business, the current business, very, very sustainably. But with that kind of capital, I think the best use of it today is, right in front of us, which is MicroStrategy and what they have done with their Bitcoin strategy.
Okay. Bitcoin
and
Maxi.
Absolutely, 100%.
Okay.
Big fan of Michael Saylor.
Yeah.
And, with this kind of capital, all you got to do is, buy Bitcoin with it.
Mm-hmm.
If you have the best asset that has ever been created on your balance sheet and make it an objective as part of your treasury strategy to accumulate more in a way that doesn't expose or leverage your balance sheet in any way, and you can get the right shareholder base to support that, you've got one of the greatest business opportunities ever created right in front of you. And the beauty is that for the first time ever again, I believe there's a business strategy which more people benefit if you talk more about it. There's nothing proprietary or competitive about it. Michael Saylor has gone out and put his entire playbook out there, and there's more and more public companies now, adopting this strategy.
Yeah.
And I've spent hours and hours consuming this content, and I believe that this would be the right thing to do for any company and its treasury, but in particular a company that is, IPOing and has raised $500 million.
So just run me through quickly on the back of a napkin what you would do, or what's Michael Saylor's strategy that he's given to the world?
So what you would do is you would buy, let's say, $500 million of Bitcoin, and then you're a publicly listed company now, so you would let all of your shareholders know that now our primary objective...
Strap up! We're going for a ride.
No, I mean, you'll give them time to exit as well.
Yeah.
So as exactly as Michael Saylor did, he gave his shareholders time to sell out at a premium and advertise his strategy to the market and to allow other sellers to come in. So, you do it properly. The shareholders that are already there, may not be believers of this strategy. So, there's ways to, rotate your shareholder base. And now once you've done that, your objective is to continue growing the traditional business that you had in a way that continues to generate cash flows. Those cash flows go into acquiring more Bitcoin. Because remember, now you're a publicly listed company, so you don't need to generate dividends and these types of things, right? You have liquidity just by
Nature
existing.
Of being, yeah.
So you then put this, you have this treasury asset, which goes up and down in dollar terms, but it's an asset that you can, in theory, hold forever. The first time, again, an asset that has ever been created that you believe you can truly make a case for holding forever. And then you, as it goes up over time in value, in dollar terms, which it doesn't always go up immediately, right? It could crash 50% after you've bought it, and now you have $250 million.
Just a walk in the park, bro.
But that's that's your base case. From there, now you have a certain market capitalization. Let's say that $500 million plus your core business, let's say, is valued at $500 million. You've got $1 billion company. Now that $500 million of Bitcoin goes to $750 million. Very much achievable in a year or two or three for Bitcoin. Now, that you can go to the public markets and raise convertible debt and all kinds of instruments. I'm not a corporate finance expert, but as MicroStrategy has done, we would adopt exactly the same strategy. Of course, we'll get a great team on board that knows what they're talking about to do it.
Of course.
And just rinse and repeat, literally. There's no rocket science to it. And I truly believe that it will work. And I truly believe, and this is why I love doing podcasts, because you can see 5, 10, 20 years from now how right or how wrong you were.
Exactly.
But, I would today feel extremely compelled to try and adopt such a strategy.
And why do you feel that is the right strategy? What's that feeling around? I mean, you're obviously very successful. You've generated free cash flow. I don't know the number, but I can imagine quite a substantial amount. Why would you even want to dabble into, cryptocurrencies and stuff like that when you have enough of normal currency? Yeah.
So the line of thinking there when you say cryptocurrencies is almost like you're greedy and you want more, and when does it stop? But that is completely the opposite, actually. When it comes to something like Bitcoin, and just Bitcoin, only Bitcoin in particular, you need to spend, I think for anybody to truly learn about its value proposition and how extraordinary it is and how it's once in a lifetime type of asset that has ever been created, one needs to spend the time, in learning about it and how it works. And there's so much great content out there. Michael Saylor talks about, like, you'll have some views on it if you spend an hour on it, pro or against. You'll have some views on it if you spend 10 hours on it. But truly, if you want to understand it, you've got to spend 100 plus, 1,000 plus hours on it. Because you need to think about everything from engineering to history to macroeconomics, and fill in all of your gaps of knowledge to be able to connect all the dots and see how brilliant this thing actually is. And it addresses so many of the problems that humans have faced for the past, not even centuries, but millennia. So that's the power of this asset. And so at the core of why I would do this is because for the first time, we have an asset, unlike gold, unlike real estate, unlike watches or cars. I don't even know if you can call them assets, or unlike equity or bonds or any other type of asset that is truly finite, that is truly designed as a solid form of store of value and capital. We've never had that ever as human beings, ever. And this is why I think it's our duty as human beings to actually spend enough time in learning about this.
That was very insightful. And I think what you said at the end there, that it's the only asset that's actually finite, is probably the most powerful one sentence you could say about Bitcoin. Because everything else is just human nature to make more. Yeah. We pretend that it's finite, and then out of nowhere it comes. Yeah. Whoa, I just found that here, found that there. And and that is, in the world what it is, changing. I don't see anything else which is similar, to be honest. Well, it was an absolute pleasure to have you on the podcast. That was a bit of a curveball at the end.
That was super
I
fun.
was not expecting
I was not expecting to talk about this, but I'm proud I did. I'm happy I did.
How long have you been into Bitcoin, and when did you put in those 10,000 hours?
I've been through the journey. I've been initially a speculator in the 2016s and 17s, lost money as well, hated it for a long time, spent more time learning about it. And then eventually today I've become a maximalist.
Bitcoin prediction 2025.
Oh.
Don't forget this is recorded, so I'm gonna pull this up and send it to you on a WhatsApp.
I'd be surprised if it doesn't cross 100K.
It's definitely crossing 100.
So it'll cross 100K, and then there'll be a 20-30% correction. But I also think it's going to be less and less volatile over time. Yeah. And the gains will be more and more subdued over time. But still nothing compared to S&P 500 or anything like that. It's going to continue to, for the next 5 to 10 years, outperform every other asset class that there is.
Awesome. Well, thank you for the time. It was a pleasure, and hopefully we'll watch this and see how the predictions came. Thank you so much.
Thank you, Alex.
Take care.
That was awesome.
Thanks.